Well, holy smokes, everybody. It looks like investors are starting to wake up to the Evergrande crisis, this whole situation that is developing right now. Well, boy, do I have some news for you, because it's just getting worse. Blackrock and Fidelity, the world's two largest hedge funds, has been hit as the dominoes are now starting to fall. In this video, I'm going to go over how we're starting to see the effects of the Evergrande's collapse in the global markets. I'm going to go over how much exposure the big, huge hedge funds do have to China's real estate market. And then I'm going to go over how this is going to have huge consequences for the stock market and the financial system, as we're now starting to see the stock market boom looks like it's over. And we're starting to see much more red days than green days as investors start to wake up to the reality of the situation we're in right now. Okay, everybody, let's not waste any time. Let's get straight into it. So quickly, for those that don't know, BlackRock is the world's largest hedge fund with $9.5 trillion in assets. And they're also the hedge fund that's been coming up in the news a lot lately for buying up, entire neighborhoods and many single family homes, pricing out first home buyers. But it's looking like karma's coming back to bite them as they're now starting to be hit very hard. And also, Fidelity is the world's second largest hedge fund, and Fidelity International has $739 billion under management and is an offshoot of Fidelity, the largest Boston-based fund manager. So again, people are just saying, oh, Evergrande, it's just one developer. If that goes down, it's not a big issue. But people, there's over 100 banks and over 100 non-banks and shadow banks, which has been lending to this company. So if Evergrande just goes down on its own, like I've been saying, it's not a big issue. But we're starting to see how much other companies have exposure to this company and how it's going to cause more issues than just going down on its own. Now, also something we need to know about that is a similar situation to the global financial crisis with all these subprime mortgages, which were, toxic debt, which were wrapped up as good loans and sold to investors. Well, there's also a market called junk bonds, and that's high yielding debt, which is also high risky debt, which BlackRock and Fidelity have been investing in. So the BlackRock fund has a fifth of its assets exposed to China's real estate sector, and nearly a third of the portfolio holds high yield debt, also known as junk bonds. So that's huge, everyone. BlackRock has a fifth of its assets exposed to the Chinese real estate market. And again, China is the second biggest economy in the world. And real estate development, why just on its own it may only contribute 10 to 15% of GDP, but when you tie in all the other sectors connected to real estate, it actually makes up 30% of China's GDP, which equates to roughly $4 trillion. So BlackRock has increased its holding of Evergrande debt over the past few months, along with HSBC as well. The Fidelity Fund is squarely focused on high yield debt, and its biggest holdings include some of China's largest real estate companies. And what are we starting to see now, everyone? We're starting to see investors pull out of other real estate investment companies and other developers as fears start to grow, which I'll go over these record outflows in just a minute, because people, it's absolutely crazy. So the Fidelity Fund did not disclose China's Evergrande among the top 5 debt issuers in its monthly disclosures for the end of August, but has 45% of its assets in real estate debt. Well, I don't know about you, everyone, but I'm starting to have deja vu, and things are starting to sound very, very similar to what happened in 2008. The only difference is that happened in the US, and now it is happening in China, which the real estate market in China is $55 trillion, the biggest and most expensive real estate market in the world. And Hong Kong and China's real estate puts housing bubbles in the rest of the world to shame. But now look what's happening, everyone. The dominoes, the ripple effects of Contagion is starting to happen. BlackRock and Fidelity funds suffer exodus on Evergrande fears. Two of the world's largest fund managers have emerged as early victims in the fallout of China's Evergrande crisis, as investors swiftly departed BlackRock and Fidelity international funds that are exposed to China's real estate debt. Now listen to this, everyone. This is crazy, and these are the effects and the warnings I was telling about what could happen if Evergrande goes down. This is the real world consequences we're starting to see now. So investors withdrew $95 million from the Fidelity China High Yield Fund in the week ended September 22nd. And this is the biggest withdrawal of funds on record. And just to put this into perspective, the weekly outflow for the $2.3 billion fund is 50% larger than the previous high set in March last year. So that's right, this withdrawal is 50% higher than the withdrawal during the pandemic last year. And we saw how much of an effect that had on the US stock market. It plummeted 40%. Well, these withdrawals are higher than that. Now, the Blackrock Global Fund's China Bond Fund is another casualty in the Evergrande saga. It's one of the largest of its kinds with $9.2 billion in assets and has suffered a $37 million in redemptions for the week to Wednesday, according to EPFR Global Data. So of course the media is telling us, don't be alarmed, keep putting your money in the markets. Nothing wrong here. Meanwhile, the two largest hedge funds and their clients, these are some of the wealthiest and best investors in the world. While the media is telling you to keep buying and not to worry, it's not an issue, these wealthy clients and these big, huge hedge funds are heading for the exits. And this is also the largest outflow on record as well. Because I'll bring up a chart here, people. This is the weekly inflows and outflows of the Fidelity China High Yield Fund and also Blackrock Global Fund's China's Bond Fund. That was Fidelity. Now we'll look at Blackrock. Again, the outflows are much, much higher than in 2020. So the company's woes over the past few weeks have been sparked by global concerns about the prospect of financial contagion akin to the Lehman Brothers collapse that helped trigger the global financial crisis. So again, people, as this story develops, it's starting to look more and more like 2008 all over again. And listen to what the local governments are saying about this. So uncertainty is still looming after Chinese authorities asked local governments to prepare for the potential downfall of Evergrande. And what are we starting to see now, people? We're seeing the People's Bank of China starting to panic, and they're injecting billions and billions into the banking sector through the reverse repo markets every single day. And this is causing Evergrande's bonds to be sold for 30 cents on the dollar. That signals that creditors do not expect to see their principal paid back to them. But that's not all, everybody. There's much, much more going on right now. So investors pulled a total of $1.1 billion from emerging market debt, mutual funds, and exchange-traded funds for the week. This is the biggest outflow since June and one of the worst weeks since March 2020 when the pandemic began. So everyone, what does this mean for you and me in simple terms? Well, this means the markets are starting to wake up to the reality of the situation we're in right now. This story about Evergrande, I think, is the biggest story that is happening in the markets right now, and also places the biggest risk. And we're starting to see investors and the markets wake up to this reality. We're seeing much more red days in the stock market than normal. We're seeing everything sell off. We're seeing bonds sell off. The yields on the bonds are rising. The US dollar index is rising. Cryptos are falling. Even precious metals, which are normally safe haven assets, have been performing poorly as well. Why? Because there is a huge liquidity crisis. Because all the shares, all the debt, all crypto, precious metals with the paper metals markets, it's all just fake. A lot of it is just derivatives. It's not actually the metals there to back those physical silver ETFs. And there's a lot of derivatives on stocks as well, and a lot of derivatives with debt. So people want cash because when things go down, they don't know what's really going to be there for them to take. And this is why I've been warning that it's time to prepare, because things can change very quickly. And I said the crash won't happen until all the stimulus gets taken away, which is what we're seeing now. It's looking like we're getting closer and closer to the taper, and also something we're talking about with Palantir buying gold for a Black Swan event, which is what we're seeing right now. But everyone, that's just some of my thoughts and opinions on the situation going on right now. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.